You are listening to chartingwealth.com for Tuesday, the 21st of July, 2015. We always start off with IYY, and we'd like to start off on the two-day chart. IYY is, of course, an ETF that represents the total market. ETF is an exchange-traded fund. This is what the whole market has been doing over the last 8 days. Each of these candles represents 2 days. What we see is a nice run-up in the market after a bottoming out. Back on the 9th, the candle for the 9th, again, each candle represents 2 days. We have a trend line that we have been working on drawing, a 2-day trend line. We've not yet been able to capture 3 candles. We are trying our best because those are the best trend lines. And oh, looks like we got one there now. So we like to have 2-day trend lines because we follow the trend. We like to see the trend continue in the right direction, whether it's an up or down direction. And then we look at how it maintains its levels, either above if it's a rising market or below if it's a falling market, that 2-day trend line. Well, we had a crossover going up on the big chart back on the candle after the 15th. It has continued to rise over the last several candles, and we, of course, continued to see it go up today. Today, for the record, it was up 0.15%. Now, that is not 15%. That is 0.15%. So a very small amount, but nonetheless, it was up. And in fact, we're about to go to the 4-hour chart. You can see on the 2-day chart, those of you who are watching, that it's pretty much topped out about where it was the other day, like we said, where it was on Friday. Now, as we said, it's only up 0.15% for the day. Let's look at the 4-hour chart to get a little better feel. We can see that the market actually has been topping out since about maybe the 16th or so. It's continued to sort of run along about that same level at about 107.25, $107.25 or so. And we can see that the MACD, that is the blue line, and the signal line is the red line. These are indicators at the bottom of the screen. Again, for those of you listening, I'll explain what we're seeing. We are seeing those two lines coming together closer as time wears on. We're also seeing the derivative oscillator reduce its oscillations, so its movement is getting smaller. We're still well above the 2-day trend line, but we can see a converging, what appears to be a converging, at the top by the MACD indicator. So what does that mean? Well, nothing yet, except we're paying attention to see if perhaps the market is topping out. Now, that is what we see on the 4-hour chart. What happens when we see this 4-hour chart roll over and go down? Well, we look to see if it's going to turn around and go back up, because that may very well be a point for us to actually get into an up movement on this chart. Now, let's go next, range back out to the 2-day chart. We're going to go to the S&P 500, represented by SPY. Again, that chart looks somewhat similar. I'm going to see if we can redraw a trend line here, which it looks like we are able to do. We've got we have 3 candles connected. That is the candle on the 15th, the candle on the 17th, and then today's 2-day candle on the 20th. We see a crossover around the 15th going up, and we see the MACD moving up along with the derivative oscillator. A good move up in the market after bottoming out around the 9th, just like we saw on the big chart, the IYY. That is the total market. If we look at what happened today in the market, the SPY, the Standard & Poor's 500, was up 0.05%, so that is 0.5%. Now, let's range back to the 4-hour chart and see what we see. We see again, what again is, movement right along the top of the chart. It's continued to move up. The SPYs continue to move up more than the overall market has. We do see that the derivative oscillator is losing some of its steam, and it looks like the MACD is converging closer toward the signal line, which could mean the market's topping out, but not yet. That's where we are on the S&P 500. Now let's range back out to the 2-day chart. Again, these charts are brought to you by freestockcharts.com. We're looking at the Qs. Look at the Qs. Continue to push up. way outside the Bollinger Bands over the last 2 candles, the last 4 days. Again, crossing on the 15th, the derivative oscillator crossing on the next candle on the 17th. And again, big pushes up on, again, this small, narrow chart. Again, the Qs itself was up only 0.34%, so about 1/3%, but significantly more than the IYY and the S&P 500, the total market in the S&P 500. But we do see a big pushing up. Now, we are well above our 2-day trend line. We can again attempt to redraw our 2-day trend line using the latest candle to see if we can connect 3, and we're close to being able to do that also on these last 3 2-day candles that we've had over the last 6 days. So let's range out on the Qs, which again is the NASDAQ 100. We're going to range over to the 4-hour chart, and it has continued to track up well above the 2-day trend line. Not a lot of converging on the NASDAQ. It continues to push up. A little bit of reduction in the derivative oscillator, but again, MACD is really not reducing a lot, and that is our big determinant on moves in the markets when we're using indicators. And of course, the MACD is our favorite indicator, the moving average convergence divergence. Now, that's where we are. All of our charts, as far as the indexes go, are up. Qs is up the most strongly. Could be seeing the total market in the S&P 500 maybe getting a little long in the tooth. We shall continue to watch that. We're going to range back out and follow the chart we've been tracking for quite a while on a complete opposite tangent, and that is gold. Look at gold. We started calling gold moving down, crossing over on the MACD back on the 23rd, and it has continued to track down, and it dropped way below the 2-day trend line today. Gold down significantly, down 2.72%. So gold is down significantly, way below the Bollinger Band. It really got hit today. So of course, if you were in an inverse gold fund, you did extremely well today. We're going to watch always, whenever we see anything outside the Bollinger Band, we want to watch for either a tweezer top, if it's what we saw in the NASDAQ 100, where we saw the movement way outside. If it's a tweezer top, what happens after the market tops out is we see a red candle going down. That is a good move for a strong down, sustained down move in the market. In gold, if we see a tweezer bottom where the next candle past the long red candle going down today is a green candle going up, then of course we look for a strong sustained up move. So haven't seen any of that yet, but we'll keep watching. Let's take a look before we leave gold. We can see what happened throughout the day. Gold made its huge move in the morning. It then popped up a little bit to start the afternoon and moved down a little bit lower, but pretty much paralleled about the same down move as it ended the day. And the reason I'm ranging out is I'm looking to see if we can find any other parallels to this down move. And really, it is a strong down move, the strongest in many, many, many months, actually over the last couple of years even. Gold is down significantly as the markets rise. So that is extremely important for all of the gold bugs out there to pay attention to what's going on with gold. Continue to follow us as we continue to track gold, along with the total market, the S&P 500, and the NASDAQ 100 as represented by the Qs. That is where we end the markets today. Hope that you have a great day starting trading on Tuesday, the 21st of July. Again, at chartingwealth.com, please join us every day. Sign up for our newsletter. You can get actually these important market reviews and our weekly review and forecast every Monday, starting the week, so you can plan for it. And also, you get all of our good training. You can go to chartingwealth.com, sign up for our newsletter. You can join us on Facebook and Twitter and Instagram. Thank you so much for joining us. It is great to have you with us. Wish you the best in trading and investing from chartingwealth.com.